Let's bring in now John Freeman from CFRA Research and CNBC.com reporter Jennifer Elias. Good afternoon to you both. John, I'll come to you first on these numbers. Sure. I mean, what in particular do you think is driving the shares higher by 5%?
Well, I mean, the outperformance definitely blew away my estimates. I mean, the beat was pretty substantial. The revenue growth, over 30%, getting, obviously an easy compare from last year, but still just a really impressive comeback of, digital advertising and surge of digital advertising as it takes share from, I think, from traditional media. But even more impressive, I thought, was the operating margin hopping from 19 to 30% year over year, and really sort of realizing, I remember I was saying, like, are they going to really show some leg and realize a lot of the inherent operating leverage in that business? And there's a lot of it because of the regulation issue. And apparently they didn't have a problem with, going all in. I mean, it's just a very intrinsically profitable business. So that also was impressive.
Up 4.7% after hours. Jennifer, what about you as someone who writes about this company often? What were you hoping to learn, and what did you learn?
Yeah, I think the big question was there was a high bar for Alphabet this time around in this first quarter earnings. And, was Google going to be the big beneficiary of this economic reopening? And what was that really going to look like? And I think we have our answer. I mean, the revenue rose 34%, huge beat on earnings. And I think it seems like, this growth that we started seeing peaking out in Q4 2020 is really becoming sustainable, at least from what we can tell.
John, when you look at this advertising growth, how much of it is cyclical kind of post-COVID bounce back versus structural market share?
So I think it's got to be a lot of both. I mean, obviously there is the cyclical part, but the outperformance was so strong that I have to believe that it was, also that it was, sort of part of a general trend. And you can see that by Microsoft's results. Apparently, Bing was up 19%, or was it? It was definitely up higher than I thought, higher growth than I thought. So obviously that's obviously Bing's a trailer, but it says that everybody is benefiting if you're in the digital advertising game. Obviously, search, search is such a great business in the mix of advertising with high ROIs and improving ROIs. So that's what you're focusing on is the improving return on investment for the advertisers. I think is driving a lot of it.
But Jennifer, this company still faces significant regulatory risk, doesn't it, under a Biden administration?
It does, but funny enough, it doesn't seem to be affecting or concerning investors. A lot of people that at least I've spoken to say it may result in a fine years down the road if there's any actual material effect on, whether the company gets broken up or anything that regulators are talking about, that it won't happen for the foreseeable future. So that doesn't seem to concern people, despite it looming and, having these congressional hearings it feels like almost monthly. But yeah, it doesn't seem to be a big concern for investors, at least not this year.
Thank you for joining us. It's good to have you both on board reacting to Google. John Freeman and Jennifer Elias of CNBC.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.